Hello, this is Patrick White from AA Commodities and Investments with your Wednesday, August 7th market recap video here. This is after the close on August 7th on Wednesday. As you can see here, we had December corn closing up 1.5 cents here at 4.14 even. November beans closed up 1 cent at 8.66 3/4, and Chicago wheat on September closed up 4 1/4 here at 4.88 1/4. I'm going to go ahead and get it started off here with a disclaimer. Just remember that everything that I talk about here is not a direct trade recommendation, and there's significant risk in trading futures and options. If you'd like to read the full disclaimer, please pause the video now. All right, so as you can see here, we had a lightly higher day here in the markets, and I'm just going to touch on a couple of things here. We've got the WASDE coming up here on next Monday, August 12th. Just another couple different things here driving the market. So I'm going to start it off with the weather. We've got the 6 to 10 day outlook, offering a little bit more bullish help here in the forecast. It's a little bit cooler and a little bit wetter, but if you go into the 8 to 14 day, the further out, NOAA forecast there, it's getting back hot and drier for the eastern part of the Corn Belt, eastern part of the U.S., and they've been noticeably dry here. I saw a couple of posts and stuff online about Ohio and parts of Illinois, being dry as well, and eastern Iowa too. So, something to keep an eye on. Certainly the trade, it's not, full-on weather market here at this point, but, something to keep an eye on as we go through. Obviously, next week we've got the big WASDE report coming out on the 12th. That's on Monday at 11 a.m. The USDA will be out, and they're going to post their updates on yield and acres. And the FSA will also be out with their yield and acre estimates as well, just with their certification, stuff like that. So, and they'll be out just with another acre number just to make sure that everybody, is on the same page there and that there's no big discrepancies. But as you can see here, corn planted, this is the average estimates of the traders surveyed. Corn planted is going to be around 88 million acres, and that's a pretty good size drop. That's a 3.7 million acre drop from last July of 91.7 million acres. And harvested acres are down pretty good as well. They're down about 3.6 million versus last July as well there. So when you're looking at yield too, last July we had a 166 on yield. The average estimate here is 164.9. So we'll see what happens with the USDA there, see what where they come in, for yield. The range there was, I believe, 163 to 167. So on the soybean side of things, acres, they're expecting them to raise them about 1 million acres. They're at 80 million acres in July. We're supposed to be at 81, supposedly in August here. And any big size deviation from these numbers and stuff should cause a market reaction. So, I guess if there's a big reaction, if there's a big deviation on corn acres to either side, there should be a good size reaction. And I think that the August report is going to be pretty telltale here of just to see if the USDA is going to acknowledge the issues that people think that there are around the Midwest. I've heard reports of upwards of 10 to 15 million acres of prevent plant. I don't know if it's quite that bad, but if we get a bullish surprise here in this report, it would certainly be advantageous to get that priced in. So as you can see here, we're expecting declines across the board. It's largely expected to be a bullish report. So we'll see if the USDA can beat how bullish the traders want to be. With that being said, though, too, with those estimates, we've got a pretty good size carry out there. Soybeans would be at 821 million bushels of carry out, and that's still a lot of soybeans around the world. And corn with these estimates would be at 1.62 billion bushels. So it's still a tale of two cities there as far as corn and soybeans go. Corn is way lower supplies than what we saw obviously last year and stuff with that estimate of 2.392 billion bushels on the old crop there. So in soybeans, the pile is still big, but I guess it's getting a little bit smaller. Down about 200 million bushel year over year is the estimate. So something to keep an eye on there, certainly. So going on into the charts here, we've got December corn. Really we've been in these last, 5 days, we've been inside of a trading range. So essentially, we went down and stabbed below the $4 mark in the December contract here. Couldn't hold below that. That was on the Chinese news that they were going to buy, continue to buy U.S. agricultural products, and we failed to sustain the sell-off there. So ever since then, we've basically been rallying. So we've, put in a low here by the $4 level, and we've seen resistance at the $4.15 level. I think we're probably going to get up into the $4.20 region, but I think overall we're going to range largely between 405 and 415 before this report. So, those are the two levels to look at. If you want to be long on retracements lower, little retracements, maybe down to 410, something like that. But, just ahead of this USDA report, I really don't think they're going to take anything and run with it. So I think, we're just going to do a lot of ranging and a lot of hurry up and wait here before the USDA report. So kind of the same thing with the wheat market there. We've just been making, lower highs and lower lows here. And the wheat market really haven't been able to get anywhere the last 5 days. They went down to the 475 level. That was a support level as well. And you can see how that came into play here this last spring. So that was an area that they tested, especially in May there, where we see the resistance and the support off that. So we've been holding the 475 level in the September Chicago wheat contract, and also the 485 level that corresponds with that other high made in the spring. But with that being said, we really haven't been able to get back above that $5 or 502 mark, that psychological resistance level. So the market's just kind of chopping, sort of range bound here. We have not had very good export demand at all for wheat. The U.S. hasn't even been offering prices, so we're still way out of the realm of reality there. But we'll see if the USDA has anything to offer on the bull side of things. I doubt that we'll get a whole lot there, but it's just kind of a hurry up and wait. I guess if we do get below the 475 mark, we'd probably be looking back down at this 455 level. And as you can see, there's multiple highs there from this last spring. So going on into the soybean market here, really just a really tight range, basically between 860 to 873 or 863 to 873, whatever you want to call it there. These last 4 days have offered basically nothing besides sideways chop. This on the 5th there, we had the report of the Chinese suspending their U.S. agricultural import purchases, and the market sold off, and they went down to the 854 low. They got this gap over here that was left on Memorial Day weekend. They got that gap filled. And since then, we've been sideways. And the market's inability to find sellers on such bearish news, kind of signals that the sellers are running out. At the same time, though, we don't have a story to get us to rally. I would look, if we were going to rally, I would want to see a rally above 873 to 875 and a close above there. If we could see that, then we would have to clear the 880 mark, and then we would probably head back up to the $895 to $9 zone. But yeah, and I think that overall, barring a huge surprise from the WASDE, a retracement higher in soybeans up into this $8.90 to $9 zone should probably be sold. And I know that it's tough for a lot of guys to do that just because of their break evens and things. But this market's just really got a lot of issues with as far as demand goes, and just the yield problems are not as good as corn. So, and you could even draw a trend line and stuff in here too. It's just going to take a lot for the soybean market to rally above that $8.90 to $9 mark. So, and what's been leading the soybean market lower? Well, that's been the soybean meal market, and as you can see here, we've had a pretty decent sized slide down on the meal market. Went down on the China news and touched almost down to the 22 or 295.10 support level. We've just been chopping sideways since then. We really haven't gotten a whole lot of bullish price action to confirm any turnaround. So right now, the trend's still down in meal. Obviously we've still got a lot of demand, demand fears and things like that, just from the African swine fever and the trade war. So, it's good that we held this low over here in, the low from May at 295. But, if soybean meal can't turn around, I'm really not too optimistic about soybeans. So, with that being said, just make sure you manage your risk here if we do get a rally back on soybeans. And I would like to say, the last couple of days have had a buy alert in the corn market, and that was based on this key reversal day here on the 5th there of August. And we went down, we scored a new low versus the previous day, and we closed at the high there in the top 25% of the bar there. So that's a pretty good buy signal, in my opinion here. We have been oversold for the last 3-4 days, and we really haven't gotten a huge confirmation yet to buy corn, but I think that's just because of the WASDE coming up, and traders are just ranging before they see more information. So going on in here to livestock, October live cattle. I've been watching this. A lot of actionable levels in this market here. Essentially, to paint this with a broad brush, we've been ranging between 103.5 to 110.5 or so, just since June. So, I've been looking at this market here. We've got a little bit of support at this gap level that we had at 107, but we broke that here this week today. On the day we rallied all the way up to that 107.20 region and sold off there. So that 107 is good resistance. If we can break back above here, we might be able to challenge this old high here at 110.20. But, if we don't, I think these old lows are kind of in play. We're definitely just in the middle of a trading range right now. So, these old lows are over here at 103.5. And that would be the area that I would look for support. On October hogs here, kind of the same story. Just had a major sell-off. We rallied on, the U.S., thinking that they had an export deal with China, with hogs and a little bit of beef, I believe. But we were going to sell pork to China until we weren't. And so, when the Chinese said that they were going to suspend agricultural purchases and, just the week ahead, too, when they found out that deal wasn't going to get done, we saw this slide down. And this gap down was on the 5th there, and that was when the report came out that the Chinese were suspending U.S. agricultural purchases. And so we kind of made a new low down in there at like the $62 mark, and we rallied back above to resistance at 68.70 or so, 68.60 call it, and we haven't been able to get above there. So I think this is going to be a range-bound market between $68.60 and $62. Any break above there, we'll see what happens. But I think we're just going to range in this market because the U.S. and China are really far away from getting the trade deal done, and traders are just really worried about the further export demand. And the deferreds have even sold off as well, even more. So just a real interesting time in the hog market and a heck of a lot of volatility. I guess we did get down to that $62 mark, and we look like we saw some choppy supportive type action. You might want to take a stab at it, but definitely use a stop loss there. As you can see, this thing is going to be pretty volatile. So that's about all I got, guys. If you want to, give me a call to talk markets, anything like that, you can call 712-262-7606, or you can reach me at aacomm73@gmail.com, or check out the website at aa-commodities.com. And thanks. Talk to you later.